Let's bring in Rick Santelli for more. Rick, is this one, is it better prospects? Is it more like Mohammed El-Arian was saying this morning, just more global bond issuance from Japan, Germany, and the rest of it? What do you make?
Well, global bond issuance is game number one in terms of Treasury yields, as the last guest aptly pointed out. Absolutely. But that doesn't necessarily mean that interest rates are going to zoom. What it may mean is they're just going to kind of stay higher for longer. Where have we heard that before? Now, look at a 20-year. Now, we had the auction today, and granted, it's the odd guy on the curve. It was a reopening. All the reasons maybe to pay less attention. But it was still a terrific auction. As you look at the chart, and that's a 3-hour chart, you can barely make out right at 1 o'clock Eastern that rates dipped, although now they're coming back and dipping. But the 20-year, it's got the lowest net change of yield on the curve right now. It's only up a couple of basis points, but the rest of the curve, including the 20-year, is still elevated. Now, let's look at a 1 week of 2s and 10s. Kelly, you were right. We've been moving down, but that has changed a bit, and I do think that Japan plays a big deal in being the poster child for debt, and along with the UK, issuance. So we need to pay very close attention because we're in that game. We might be the leader in the issuance game. Let's look at that JGB, Japanese government bond. That's a multi-day chart of their 10-year. As you pointed out, briefly toying with 1.6%. It closed right around 1.58, very elevated. And you might be asking, well, gee, our 10-year's way higher. Of course, there's something called an interest rate differential with the foreign exchange side. Their currency, of course, is what makes up that difference. And finally, the dollar index. Now, here's a 1 week chart. And even interest rates being stubbornly up 4 or 5 basis points most of the session today didn't really help the dollar index. As a matter of fact, keep this in mind again, that on the 2nd of July, we had a 3.5-year low close at 96.78. We're not that far away yet. Must pay attention to that level. Technicians will sell into a violation of that important low close. Brian, Kelly, back to you.